All right, I want to thank you guys for attending this morning's webinar session on our webinar theme for the month of May, which is common issues and how we go about solving them using some of the standard SAP solutions provided. So this morning's session, we're going to talk about the procure-to-pay process and a little bit about how we can go about paying our suppliers a little bit more promptly. Okay, we have three more along the lines of this in this particular theme for the month of May. Each one of our webinars takes place on at 11 o'clock Central Standard Time on Thursday, so please feel free to join us at this particular time. Next week we'll be talking about products and the order-to-cash process and how we can actually securely track those products as they go through the supply chain. The following week there's a serialized track and trace piece, right? So if we have serialized products that need to move through the supply chain, how do we go about ensuring that those products are tracked safely? And then the last Thursday of the month, we're talking about basically supply chain maturity. We talk about vendor compliance, scorecards, and the role that EDI plays in that. And we'll go forward from there, okay? If you want to know where the webinars are stored, you can go onto our website at qdatausa.com. Just click on the resources button at the top, and then previously recorded webinars. This webinar will be up there shortly. Also have a look at the upcoming webinars and register for those, so give yourself some time to get the registration done. Okay, so throughout this webinar you can ask questions in the little questions bar at the bottom over there. So don't ask me about the weather because it's nice here in San Diego, but also if you want to follow us on Twitter, there's our symbol at BizMaturity, and a lot of the hashtags we use is hashtag QData, or if it's event management specific, _EM, _TM for transportation management, and so forth. There's our Facebook page, our LinkedIn page, and our blog. So feel free to go and follow us or read what's going on over there. Okay, so in this morning's session, we're going to cover basically the problem statements. I'm going to go through the business process that we're dealing with and then tell you what the issue is. And then we're going to go talk about how do we enable a solution for this particular problem. And then we're going to see it in action, not in the system, but I'll show you exactly how it's demonstrated, and we'll wrap up and take any questions. All right, so type in those questions if you have, and we'll address them near the end. So let's understand just the procure-to-pay process a little bit so we can give it some context. Okay. Generally, a supplier offers us a product, whether that's in a catalog or something like that. We show some interest in that particular product, so we want to procure that particular product. So we cut a purchase order, we shoot it back to the supplier, they receive the order, and then, if they have to actually manufacture the product, they will actually go ahead and manufacture that product. Once it is manufactured, they go ahead and ship that product. Okay, so they pack it and ship it. At that time, typically they would send out the invoice. Okay, so on their side, the accounts receivable folks, cut up that invoice as it relates to the PO and as it relates to what was shipped out, and they send it over to us, and we receive that invoice in our accounts payable department. Now, our accounts payable department aren't going to pay that at this time. They're going to wait for the products to arrive. So here comes the ship. It arrives at our location here in the US, and so we receive that product. Accounts payable get the notice that we have received that, so they validate and they pay that invoice, and the supplier gets their payment. Okay, it's a pretty simple process at the end of the day, right? So here's the problem, and let's just deal with it with real values, and this is what we've actually seen out there. So let's go with that, and we'll put some dates and times in here too, so we can see what's going on. All right. So once again, the supplier offers us a product. Let's say it's for $100,000, so a rather large PO, rather large product. it's coming from overseas. That's giving us a 4% net 30 from invoice date. So we have a potential $4,000 discount if we pay within 30 days of receipt of invoice. Okay. So we get that PO as mentioned before. So we say, hey, based on that catalog, we can accept that. So let's cut that PO for $100,000 with the 4% net 30, and we shoot the document over to back to the supplier. And over here, typically I'm putting in here the EDI transactions. We're sending over an 850 on orders message if you're using Edifact. But 850 is the X12 message. They receive it. They process that as a sales order in their system. They go ahead and manufacture that product, and then they ship the product using that carrier. All right. And let's just say for our example purposes, it's October 1st that they're actually shipping that product. And then we say, best case scenario, on that same evening, they would cut that invoice and send that invoice to us. Let's say that they want to get it going, but they could also wait until the end of the week. But let's just say, all right, that same day they're going to cut that invoice and send it off to us. All right. So we would actually receive that invoice on the same day, and we post that invoice. So in other words, the terms have started at that point in time. So our term period would be October 1st to basically end of October or November 1st, just to be safe. Okay, so October 31st. Then the ship travels, takes a little while, gets over to the port in the US. They offload it, and then they put it onto a truck, and they head off over to our warehouses, and they drop it off November 15th. Okay, we receive the product, and we do the goods receipt into the warehouse. At that time, accounts payable can say, safely say we have the product, so let's release it for payment. It's November the 15th. We release the payment. We just lost $4,000 because of our process at the end of the day. All right, I hope everybody can see that. It's a pretty simple scenario. So just a couple of things here to notice. Because the supplier has been paid now 15 days late, often what the supplier can do is they switch the mode, right? If they're responsible for getting it over there and they need their cash, and we're responsible for paying that the shipping at the end of the day, they will switch it to be an aeroplane instead. So they'll use a much more expensive mode of transport to get it to us so that they can get it quicker, because our receipt of goods will be done a little bit earlier. Okay. We naturally on our side have to pay based on the goods receipt, because we do not want to be paying for goods that ultimately haven't been shipped, okay, or or some things happen to them so we just need to make sure we see the product, and then we can go ahead and pay that particular invoice. Okay, so from a requirement perspective, what are the people looking for in a process like this from a procurement standpoint? Okay. So if we're able to pay those POs a little bit earlier, we would increase our PO payments basically within that term. We would increase our discounts claimed, and I'd say that conservatively around 50% of those discounts can be claimed if we adopt this particular approach we're talking about. And typically what we've seen in organizations, about 15 to 20% of POs are paid outside of terms. Okay, so I would have a look at your organization and just have a look at how many POs are actually outside of terms, add up all those terms and see what you're leaving on the table. Okay. At the same time, we would improve our credit rating by not paying late. Okay. And ultimately what we're talking about there, more traditional transportation modes are leveraged, right? Much cheaper transport. Let's use the ship as opposed to the plane. Let's use the train. Whatever the best way of getting there is. Okay. Now let's talk about an enabler, and we'll run through our process again, right? So there's three main things that we need to get in sync over here in order to actually get this process squared away so we can pay our suppliers a bit sooner. The first one being supplier collaboration. Obviously, we need to be able to work with our supplier. They need to give us the right information at the right time, timely information and accurate information. Okay, and we'll go through what that is now. We need carrier collaboration, right? So the folks that are picking up the goods from the supplier, we need the information, timely, accurate information from them as well. And then lastly, from an accounts payable side, we need a little bit of innovation, and that three-way match is what we're talking about here. But it's our flavor of three-way match, and that's where the excitement starts too. So what sits behind that three-way match? Okay, firstly, we have the invoice, we have the ASN, and we have the carrier status message, and they're all tied to the PO. But the first thing we need to deal with is on the invoice side. We need to block that invoice. We need to stop it, and then because we need to determine whether we can pay it or not. But obviously, the first thing we need to do is not release it for payment. So we're going to block the particular invoice. We're going to take the ASN. So in other words, the advanced ship notice. This is our supplier collaboration. We need the supplier to send us an 856 advanced ship notice to tell us exactly what they have shipped based on the purchase order that we gave them. So if we've ordered this product of $100,000, let's make sure you've sent us that same product with $100,000. So if we ordered 5 products of $20,000 each, did we get $5,000 or $20,000 each? In addition to that, with that ASN, they need to give us the carrier tracking number, so that we can then do the next step of the enabler, which is the carrier needs to send us the status message based on that carrier tracking number, so that we can see whether they picked it up and then ultimately what the delivery is. But one thing to consider here, once it's transferred ownership to the carrier, the ownership is actually transferred over to the carrier. So, and obviously this is how another thing that you have to arrange through your PO is to when that ownership is there, so the Incoterms. And ultimately what puts it together is an application called SAP Event Management, which is going to be tied into that invoice piece and perform the three-way match for us. So it's going to check the invoice that has been sent in by the supplier, together what was shipped from the supplier, or shipped from the supplier, basically what the carrier picked up, and then we're going to bounce it off whether the carrier has actually picked that up or not. And if the 3 of those things match, then we're good to go. I got one slide here on event management, because this is a tool here that we mentioned. We've spoken many times of event management, but if you haven't heard about it before, it is SAP's tool initially to implement supply chain event management, which is a concept out there to monitor, actively monitor your plan versus your actuals in your supply chain out there. Subsequently, it's also used outside of the supply chain. It is the SAP's tool to monitor any business process, irrespective of whether it's involved in the supply chain or not. It can be an HR process. Therefore, we don't really distinguish between the business processes. If you want to track and trace and monitor a business process, use this tool. If you want to measure the compliance against the plan, the SAP Event Management's there. If you want to give visibility to your business process and the status around that process to folks outside of business process, then Event Management is that tool to give you. And it is a tool set. It's not a solution out of the box. They give you some plugins in certain areas, like the Procure-to-pay area, but it's a tool set that you use in your organization to give visibility and status management and exception management to all business processes in your organization. All right, so just a little recap on the process flow, what we're talking about here. We cut a purchase order in our system, we set the terms, we set the discount, the supplier gets that order, they transfer the goods to the carrier, and they send us the ASN to tell us what the carrier tracking number is. The carrier receives the product, takes possession of the product, and then they send us the tracking status. And on the invoice side, the supplier sends us the invoice, we match the PO, we match the ASN with the carrier status, and we release it if it all matches. All right. So let's have a look at back to our scenario and see how this actually would work. So this slide gets a little bit busy after a while, but hopefully it tells me a story at the end of the day. Okay, so there's our supplier again, offering me his product in his catalog. I decide to take advantage, so I send an 850 order after cutting that PO off to the supplier. They go ahead and they create that sales order on their side. They manufacture the product. At that time, they're going to ship the product using that carrier on October the 1st. Here's one of the first pieces. So we've got the carrier collaboration coming, but here's my supplier collaboration. We received the ASN on October the 1st. So this, for example, in SAP, that ASN would generate an inbound delivery against that purchase order on the same day, October the 1st. And that's the inbound delivery that we would typically receive against, okay, in our warehouse. That inbound delivery has the details of all the items, the quantities, the date of arrival. It has the carrier tracking number information over there. So at that time was our first time when we actually bounced that off against the PO, just to say, you know what, these were the terms, and in terms of the date of the delivery, the quantity, the product, the price, and everything that was dealing with that PO. The ASN is a document that comes back and says, okay, you asked for 5, they sent 5, of this product. So this is a good time over here. As long as it matches that PO, we're still in a good place. If it's not, we would be raising an exception. Again, you could be tracking that with event management, but just to say, we received an ASN, but it doesn't match the PO. There's other transactions that will do that too, but the event management allows you to make that status visible to other folks outside of the process too. Okay, so next up, still on October 1st, the supplier's accounts receivable folks cut that invoice as per normal on October the 1st, and they send it over to our accounts payable folks, and they receive the invoice and they pay it, and that's an 810 message going out from the supplier. So that would be an inbound 810, so an inbound invoice in our system. Now we start to get the carrier status messages. All right, so they just picked it up from the supplier on, let's just say they picked it up, and the first message we got from them is October 2nd. Okay, they picked it up on October 1st, but the first time they sent it to me was October 2nd, and usually it's the same day too. It's within a couple of hours, right? But for just for display purposes, we say it's a day afterwards. Okay, so that's the very first message. It doesn't matter what the message is. It's just, did we get an event based on that particular carrier tracking number that we received on the 856? Okay, so there's already a match up there. Right, so now we're still talking about October 2nd right now, because at this time we have actually everything in order to actually release that invoice. All right, so let's just have a look at those 3 little arrows over there that are on the thing. We have an invoice from our supplier received on October 1st. It tells me that whatever the price was and the quantity and the material was, and it must match obviously the PO. So if that is good, let me go and have a look at the inbound delivery. So the inbound delivery has been received, in other words the ASN. So that was received on October 1st as well. And it tells me that I asked for quantity 5, particular product. And here's the carrier tracking number, and then I go through to the carrier event, which is sitting out in event management. I pick up that carrier tracking number. If there is a carrier tracking number, whatever status it is, as long as it's one that's sort of an in-transit type status, a carrier pickup, it can be held in customs, it doesn't really matter as long as they have their ownership of the product. Then we're okay to go ahead and release that invoice. Okay, we obviously want to wait near to the end of the terms before we cut that invoice, but we want to make sure we cut that invoice out there. So for all intents and purposes, we can cut that invoice or release that invoice on October 2nd for payment on October 31st. Okay, so we release that payment, we send the payment off to them, and we receive that $4,000 discount. Okay, So that's as simple as that. The ship, meanwhile, is traveling, and it has made its way over to our warehouse, and we received the product as per the previous scenario on November the 15th, but the supplier has been paid already. All right, because we know that since we're liable for the carriage of that product, we basically have ownership of that product throughout the way, so there's no reason for us not to pay the supplier if we know that we have the product in hand. And event management is that glue that pulls it together, limits our liability, and ensures that the products are moving through the supply chain accordingly. All right, and you can see, for example, anything that's outside of these terms, it can do that. One other thing just to note over here, a lot of the terms, this is a scenario when the travel period takes longer than the terms. This can definitely, this will help out, many more than 50% of it. This will probably help out, 100% of the time. But then there's other reasons why, invoices aren't being paid on time. It's just because they're held up in the back office and so forth. Again, event management can be alert you when you bring that accounts payable invoice in. Put in an event as to when you expect it to happen. You expect to release the invoice by a certain date and time. If it's not released by that date and time, then you get an alert and you can go and raise an exception and escalate it to the right folks. But at least you can proactively tell the folks that this is what's going on with these particular invoices. You need to get them done because they're nearing their terms period and we're going to lose out on some cash. Okay, so that's just another way of doing it. This is a short webinar today, but I just wanted to wrap up here quickly. SAP EM can be used as an enabler to resolving these business problems. There's many opportunities to use the event management, but this is one unique way that we found out that the customers were using it. They found a real-life example, over 50% improvement in terms paid on time. About 15% of the supply invoices are paid outside of time. I've mentioned that a little earlier. Between 15 and 20% of the invoices are outside of terms. I've done myself an investigation into 3 companies, and they were all between 15 and 20%. I think it was 21% at one time. Okay, so there's definitely a lot out there. The one had over $1 million of terms discount outside of terms within a year. So there's definitely enough money on the table even to buy 5 projects to implement this. So just to wrap up what the details are, the payment for those logistics invoices are based off the match between the invoice, which matches up to the PO, the advanced ship notice received from the supplier, and then the carrier notification of receipt of goods. Okay, so the carrier status messaging. And our enablers, at the end of the day, SAP Event Management, Supplier EDI, Enable ASN, and the Carrier EDI enabled status notifications. Now I mentioned EDI, but you can do it manually, you can do it using web services, but EDI obviously is a well automated and well used thing out there, right? So definitely take advantage of it if you can. I wanted to throw this slide in over here about SAP Event Management. Since it is an enabler, we describe a maturity around event management implementation. So can you implement event management and get some benefit out of it? Yes, you most certainly can, but you need to be at certain maturity levels as an organization in order to get certain benefits out of event management. So if your organization, for example, is struggling with data integrity issues, so you've got a lot of master data issues, lack of accountability, you're performing activities outside the system, you're dumping things into spreadsheets and stuff like that, you're doing manual efforts and batch processing, we would say that you're in quadrant 1, so you're having that data integrity issues. We would suggest you doing a housekeeping exercise to get those master data and those elements sorted out so that you can move into a quadrant 2, which is more of a, you've got your data integrity in place, but your business process and your rules that you're dealing with around that data are still happening outside of the system. So you dump the data into a spreadsheet, you do your planning in your spreadsheet, then you upload stuff into the system. All the rules are in your head and so forth. We talk about that having a little bit of a process rule lack of maturity over there. If you bring those rules, let SAP do the work. So you plug those rules into SAP, let SAP do the work, then we can say, all right, you successfully moved out of quadrant 2. Now before I move into quadrant 3, you can still use event management if you're in quadrants 1 and 2, but you can use it for visibility really only. You can't really do exception management if you're in that, because the data that's coming out there in terms of your plan, may be inconsistent and inaccurate, so therefore you can't rely heavily on the plan. So let's just give the visibility to what's actually happening in the organization. There's a great benefit there. Once you've got your rules in the system, then you can start to collaborate. So now you can start to do real-time operational exception management. You can integrate notifications and proactive process alignments between different processes and stuff like that. That's when you need to be able to, what they call their sense and respond, so understand what's going on and quickly react to things in a proactive mechanism. That's when you can start to do event management and exception management all together. Okay, and then ultimately, once you've got all that good, then you're driving real business value out, okay? So if this is something you've seen for the first time, and if there's anything that's, sparks your interest, the way that we typically do things, we perform an on-site scoping assessment where we will do an overview presentation. In this instance, because it's an EM-related solution that is provided, we would give you the whole overview of what event management's all done. During that assessment, we would get an understanding through workshops, your full requirements of what you're trying to accomplish with your business processes. We give you a high-level design for the architecture and give you the budget consideration. So 1 week, basically 1 week, 2 week exercise, depending on where it is and how big the scope is. But just to give you an idea as to what you need to budget for and what you're looking at implementing at the end of the day, giving you that roadmap. Okay. At the end of the day, too, we'll also determine what's part of that implementation maturity quadrant you're in, so that we can start to understand what it is we need to address during the exercise. Okay, that's typically what we're talking about going forward. So if you're interested in that scoping assessment, just reach out to us. If you're interested in more information about QData or event management in this particular space, we have our website out there where the webinar series are on, and I showed you that a little earlier. We have a book written on event management that's available out there on Genie Press or Amazon. We have a blog going on at WordPress. Just do QDataUSA at wordpress.com. And then we also have an event management page on Facebook. We also have a QData Facebook page, which I showed earlier. Okay. So now I'm going to open it up if there's any questions. This is a slide just showing a few of the customers that we just dealt with in terms of event management. There's a few more here. Some of them have done exactly this scenario that we're dealing with today. So if there are any questions, please pop up and ask. Otherwise, I am going to call a close to the meeting and make it short and sweet. And we will make the video available to you on YouTube shortly. Thank you.